Silver did not slip quietly into the weekend. It closed Friday at $93.66 per ounce, and that number carries weight far beyond its surface appearance. It was not just another closing print on the chart. No, it was a statement. It told anyone watching closely that silver held above its 50-day moving average. That's the most important message. That 50-day moving average, by the way, sat near $89. And that buyers were still willing to defend that higher ground is really telling. The difference between those two numbers, $93.66 and $89, it may look small to a casual observer. But in this video, I'm going to help you understand how this impacts the price of silver and what we can glean from this in terms of where this price is headed. If you're new to this live stream, I host this live stream daily at 9 p.m. Eastern Time. And tell me where you're from. Leave me a comment down below. Let me know where you're from, what time you're listening to this. It really helps me understand everybody who's out there and get an idea of whether we should move this time to a different time slot. I like 9 p.m. Eastern, but you let me know. Now, to understand what changed over the weekend, you have to understand how silver behaved in the final hours before the market paused. Price action during that Friday session showed silver dipping earlier toward lower levels before finally reversing and climbing back to its highs. And that type of candle, with a strong close after testing those lower prices, that reflects buyers stepping in and absorbing seller pressure. When I say candle, by the way, the candle tells us the low and the high of the silver price in that moment. My goal of these live streams is to break down the technical aspect of silver price so everybody can understand what's going on, and really so you can understand the pattern of silver and the patterns we see and get an idea of where this price might be headed. So when it's absorbing that selling pressure like we saw, it shows that demand was present not just at ideal entry points, but even after sellers attempted to push the price down. This kind of candle does not guarantee that price will rise next. It doesn't, but it does reveal something important about psychology. It shows that buyers were not retreating. And if there's one thing we see time and again with silver price, is the psychology of the spot price is really understated. Think of when we broke $50 recently. We broke that $50 an ounce ceiling. It was just the greatest psychological breakthrough for silver, maybe in most of our lifetimes, because the build up to that $50 was stemming from the 1980s, 1970s, when silver finally got that high. And really, even dealers, online large dealers, they had been waiting for this moment. And you know what? Guess what? They were right, because we're not going past below $50 again. That's not what the data is showing us. The data is showing us, and these charts are showing us, that since we broke $50, sure, we've had a bit of a pullback. We've had a correction, but that's all it is a correction. So that's the part of the psychology of some of these. Presently, we're looking at $100 an ounce as the next psychological ceiling. And I wouldn't be surprised, looking at the history of silver, I would not be surprised to see that when we break that $100 again, we start to stay. If you're new to this live stream, first hit subscribe, of course. I post this live stream daily, 9 p.m. Eastern, and let me know in the comments where you're listening from. Let me know if you picked up any silver this week or you're thinking of buying this week. Let me know what you're up to. So the 50-day moving average, it sits quietly on every serious trader's chart, but its importance comes from how many participants watch it. It's not magic. This is not math. It is simply the average closing price of the past 50 trading days. Yet, because no market participants use it as a reference, it becomes a shared line of awareness. So many market participants use it. Now, when silver trades above that line, that's what we really have to look at, because traders tend to interpret this trend as intact. And when silver trades below it, they begin to question whether the momentum has actually fully shifted. The fact that silver closed more than $4 above its 50-day moving average, that suggests that the immediate trend remained intact and the market is really feeling quite strong. That's the first change. Silver did not close beneath support. It did not break below the line that many traders use as a dividing point. Instead, it actually held above it. And this doesn't force the market higher, it does not, but it changes the starting position when futures reopen Sunday night, tonight, at the time that you're listening to this. It means buyers enter the new session without having lost any technical control. Now, candlesticks themselves tell stories in a language that does not require words. A candle's body shows where price opened and closed. Its wicks show where price traveled but could not stay. It could not. And when silver prints a candle with a lower wick and a close near the high, it shows that sellers tried to push price down but failed to maintain control of that. Buyers absorbed what was offered, and they're willing to transact at higher prices. That's the telling part. And this type of candle reflects participation, not abandonment. So when we hear people feeling like silver's dead, it's not moving, it's dead, when you look at these candles and the patterns of them, it really helps to see where this price of silver may be headed. Now, over time, these candles, they form patterns, and one of the most widely discussed patterns within that, in the technical analysis of this, is the cup and handle formation. And good news for you as a silver stacker, good news for me as a silver stacker, and we're seeing that cup and handle, which is very exciting. Now, really listen closely to this, because this is the part that is really making everyone feel very bullish about silver. Really, really listen to this part. This pattern emerges after a decline, which we just experienced from that $120 peak dropping down to where we are. That becomes the rounded bottom, the cup. Wherever we landed becomes the rounded bottom. Then there comes a period where price kind of drifts sideways, and that's what we've been experiencing the last 3 weeks. Well, slightly downward, and the handle is the part where we're potentially attempting to move higher again. Now, the logic behind this pattern is, again, psychology. It's really key. The rounded bottom reflects a slow rebuilding of confidence after disappointment, and the handle reflects hesitation as early buyers consider selling to break even. If price moves beyond that hesitation zone, that suggests that selling pressure has been absorbed. And as we look at the charts over the past few weeks, we're seeing a nice cup and handle, and that's bullish. That's why everyone is feeling very bullish for silver. If you're new to this live stream, hit that subscribe button, drop me a comment, tell me where you're listening from and what time you're listening. Let me know what you're up to with silver lately. You buying anything? You're interested in anything specific? You're selling something? Let me know what's going on your end. Now, really place this part top of mind as I explain it, because this will really help you understand the pattern of silver and where we might be headed. The silver chart over the past year reflects elements of this process, and the metal reached significantly higher levels earlier in its cycle before declining and then climbing again. Now, with price sitting in the low to mid $90 range and holding above the 50-day average, the 50-day moving average, the market appears to be in a pause rather than a collapse. And this pause is not inactivity. It is actually observation. It is a moment where participants decide whether the price recovery will continue. Sunday night's futures open becomes important, really important, because it is the first opportunity for the market to express its collective judgment after a period of silence. And during the weekend, of course, there are no new daily candles. There are no fresh closing prices. The first prints that appear when trading resumes, they carry meaning, real meaning, because they reflect the transition from pause back to actual action. And if silver really listen to this. This is key. If silver opens and holds above Friday's closing level, that signals continuity. Many silver snackers, many dealers, they check the spot price Sunday evening because the Asian market is open and the spot price is already moving. Now, if it opens lower, but it finds buyers near the 50-day moving average, that reinforces that support still exists. If it opens and falls beneath that moving average without any recovery, that signals that sentiment may be changing. So when we look at these charts, you could really get a strong sense of where silver might be headed for the week. It's not crystal ball, of course, it's not. But this is math. This is the math that everyone who's really in this field we're looking at. Check this out, because the behavior of price relative to its moving averages, that behavior, it often reveals how participants perceive the value. At the top of this video, of this live stream, I was talking about psychology, and it's really so important. When price remains above a rising moving average, it suggests that recent prices have been higher than earlier ones. It reflects a trend that has been moving upward over time. And when price falls below a moving average, that suggests that recent prices have been lower than earlier ones, and that is reflecting weakening momentum. Now, as of Friday, silver remained above its 50-day moving average. That itself has been trending upward, but this upward slope really matters. It really matters. It means the average price over the past 50 days has been increasing. That's what you want. It means the market has been willing to transact at progressively higher levels. Not a straight up cliff, skyrocket, not like that, but it's gradually increasing. And this doesn't guarantee that the trend will continue. It doesn't. But it shows that this trend has still not yet been broken. Really listen closely to this part, because I believe that as silver stackers, many people are confused about how this next part works. The weekend itself doesn't change the silver price, but it changes context. It creates a pause between decisions. And anybody who spent any time in sales, you know, when someone's interested in something, you want them to close that deal immediately. You don't want a weekend. You don't want them to stop and wait it out. The other part, the other element that really deserves attention is how price behaves near round numbers. The $90 level has become one of those numbers, and a $100 level also. Round numbers serve as, again, psychological reference points, and they're easy to remember. If you're new to this live stream, let me know down in the comments. I post this live stream daily at 9 p.m. Eastern. Let me know where you're from. Let me know what you're listening to, what you're into buying, what time you're listening to this. Tell me in the comments. So these round numbers, yes, they're easy to remember. They become natural places for traders to place orders when price approaches these levels. That's when activity often increases, and silver's ability to remain above $90, close at $93, that reinforces the perception that the market has accepted a higher ground, and that higher ground is $95, then $100. Now, of course, acceptance does not mean permanence. It means agreement, at least temporarily. Markets are conversations conducted through transactions. Each trade reflects agreement between buyer and seller about value. When price remains above a certain level, it shows that participants are willing to transact there. When price falls below a level and cannot recover it, it shows that the agreement has shifted. Really lean into this part, because this is going to show you a lot about this price of silver. We have the cup and handle formation, like we talked about at the top of this live stream. We have the 50-day moving average that we discussed. We have the psychology of these round numbers and the psychology of a ceiling that we've talked about. Now, if all of this combined, if silver opens tonight, Sunday, and it's above $93.66, it holds that area. That suggests that buyers remain comfortable at higher levels. If it opens below but reclaims that level, goes back up to it, that suggests resilience. And if it opens and falls beneath the 50-day moving average without any recovery, that suggests sellers are gaining influence. Influence meaning profit taking. And when we hear that term profit taking, many imagine in their minds one or two people just pulling out of silver and putting their funds into something they're feeling more confident, they're able to take more of a risk, and they're looking for a high risk asset as opposed to silver, which is not a risk asset. It's the opposite, it's a safe haven. That's true. We do see that. But another way to see this is the way you and I, as silver stackers, have an exit point, which you should. I'm not giving financial advice. I'm not. I'm just a regular guy. I'm not a financial analyst. An exit point of where you feel like, oh, if silver hits this point, then I'm out. If silver hits this, then I'm out. Many seasoned silver stackers, they look at silver as a smart savings account, not as something that they dig a hole in their backyard, dump the silver in there, and they wait 20 years. They're dead. Their kids find the silver. Some people do that. But many silver stackers look at this as a smart savings account, meaning if you put your money into an online bank, one of these 4%, maybe if you're lucky 5% interest, they see silver the same way. They just want to take some of their silver every once in a while if the prices got to their exit point, and they swap out that silver for cash. So I'm not saying either way that's smart or bad, but that's what some people do. It's the same for traders. They may have an exit point, and that's where they're pulling out, and they're profit taking. Now, we've seen a lot. Well, what do you think gave us the correction when we were at $120 an ounce, dropping down to what we dropped down to 70s, high 60s an ounce? Clearly, that was profit taking. Clearly, many thought, okay, silver's not going to go any higher. This is becoming a bubble. We're out. And boy, were they out, because silver really, I don't like calling it a crash. It really was a correction for silver. Now, technical analysis, it does not predict future, with certainty. It doesn't. We're looking at in this live stream, we're breaking down the silver market. We're looking at charts. We're looking at technical analysis. Again, this is not financial advice. We're just looking at the pattern of silver and how it helps us see where silver might go. It's an observed behavior, really, and it studies how participants have acted and how they're acting now. Moving averages, candles. These are patterns and tools for interpreting the price of silver. Silver's behavior as of Friday shows a market that has not surrendered. It has not surrendered its upward trajectory. And that's a phrase that we really want, upward trajectory. It shows a market that has paused, but it has not retreated. If you're new to this live stream, I host this live stream daily, 9 p.m. Don't miss it. Hit subscribe so you don't miss it. Break it down. My goal is to break down the market and the moves in the market of that day so everybody can understand where this price of silver is going, how it's getting there, and show you the patterns that experienced analysts look at and explain it in plain English. That is my goal. So if you're into that, hit subscribe. And leave me a comment. Let me know where you are listening to this and what time you're listening to it. Now, this pattern that we saw on Friday, it shows a market that closed above its intermediate support, and it entered the weekend without breaking any structure. Sunday now, this could give us new information as the market opens. This could be all new for us. In fact, as this week rolls out, there are many moving pieces to the price of silver that could be seen as a tornado. Yes, I said tornado coming at the price of silver over the next 5 days. Because when a market stands above a rising intermediate trend line with simultaneous approaching prior resistance areas like we're seeing, it enters a period where decisions start to accelerate. And this is not because the metal itself has changed. It's just that participants begin confronting levels where hesitation turns into action. And that's why I just mentioned profit taking as an action. The next 5 days will not merely reflect random fluctuations. They will reveal whether recent technical strength for this trajectory has deeper conviction behind it, or whether it was simply the last expression of a fading advance. We do not want a fading advance for this metal. So to understand why the coming days matter, it's really necessary to see how silver was testing just on Friday the lower levels that was near that $89 range before again reclaiming its final high, which was strong. This candle had a defined body and a lower wick. And yes, as I noted, this is a visual record of buyers stepping in after sellers attempt to press downward. Candles like this do not represent certainty, but they reveal intent. And because we saw candles in that way on Friday, that could, as this week rolls out, the next 5 days, that tells us that there could be some moves that are influencing silver's trajectory. Now, this behavior, of course, is especially meaningful when we view it in relation to the 50-day moving average. Again, that average sits around $89.50. The moving average doesn't dictate price. It does not. But it provides us context for this. And when we see that average, it shows whether recent prices have generally been rising or falling. When silver remains above its 50-day moving average, that indicates that recent sessions have on average been stronger than earlier ones. And that's what you want. It shows continuity rather than any breakdown. Now, really listen closely to this, because when we look at the week ahead, this is what we have to understand. The slope of this moving average itself has begun rising. I'm going to say that again. The slope of silver's moving average has begun rising. And this is a subtle change that tells us the average price over the past 50 days has been increasing. It's rising and moving its averages, and it's reflecting a sustained buying interest across multiple sessions. That's what you want. You want buying to keep this price going. Now, there's no result in like a single dramatic spike, but what we're seeing is repeated willingness to transact at higher levels. Again, this is what we want. This is when we're looking at silver increasing in value, increasing in price, this is exactly what we want to see. But when price trades above a rising moving average, it creates a feedback loop of confidence. And that, as I mentioned at the top of this live stream, is where the psychology comes in. That feedback loop of confidence. That's what happened when we broke $50 an ounce for this metal. Get that feedback loop. When we break 95, it could happen again. When we break $100, it could happen again. So participants who rely really on these technical frameworks to interpret the relationship as supportive rather than downward pressure, they could use this interpretation and it influences their behavior, because buyers become more willing, of course, to enter on pullbacks, and sellers become more cautious. Clearly, the price is going down. When silver dropped from $120 down to $170, $168, when that happened, yeah, everybody is suddenly on their toes and they're trying to make decisions. Is it going to drop lower? Should I buy now? Is it going to drop lower? Right? Everybody has that. And so that feedback loop is really important. Really lean into this part, because looking at the 5 days ahead, and I'm really excited about this coming week, although it could be a tornado. But looking at these 5 days ahead, the part that I feel is really got me staring closely is the cup and handle. Because yes, beyond moving averages, that larger structure of silver's chart shows us the cup and handle pattern. And this pattern really begins with that decline that we saw from the peak, some sideways pricing, giving us the bottom of the cup, and now returning to our prior highs. And really, price often pauses when we're looking at a cup and handle pattern like this. this pause really reflects hesitation, of course. And earlier buyers who endured during the decline, they begin selling as price returns to levels where they previously experienced their losses. Clearly, their selling creates resistance, though. And if this resistance is absorbed and price rises beyond it, then the pattern starts to complete. And the handle becomes a launching point rather than a ceiling. And that's exactly what you want. That's the phrase you want. Launching point, baby. So silver's recent chart shows elements of this. Right? After reaching significantly higher levels earlier in the cycle, silver declined and then gradually climbed again. Now, with price holding near that mid $90 range, the market appears to be in the handle phase. And that's a period where participants evaluate whether the prior recovery will actually continue. And if the psychology and the feedback loop continues, then history shows us we might see more trajectory in price this week, more upward momentum. Now, if silver rises above recent highs, it signals that selling pressure associated with the handle has actually been absorbed, and buyers are no longer encountering the same resistance. If silver falls instead, that tells us that hesitation is remaining and it's really unresolved. Now, really follow this closely, because that phrase unresolved tells us a lot. When we're looking at the patterns of the price of silver and we're seeing that there's present issues in Iran and the Middle East, we're seeing other geopolitical factors like tariffs that are unresolved. That phrase unresolved is so important when analyzing the technical aspects of silver price, because that has capital reallocations going into silver. Institutional players pulling out any risk, any funds from risk assets and putting it in to the safe haven of silver, and that's going to, of course, impact the price of silver. But what we see along with that is, in terms of capital allocations and institutional players, we also see a window of time in which the spot price is not impacted until the end of the window. I'm going to explain that in plain English. We recently saw a lot of movement going either into or out of silver ETFs by big institutional players. When that happens, you may think, oh, by Tuesday, by Wednesday, we're going to see that reflected in the spot price. That's not what the history of silver shows us. When we analyze the history of silver, and that's my goal of this live stream. If you're new to this live stream, I host this live stream daily, 9 p.m. Eastern. Give me a comment down below. If you're gaining any benefit from this live stream, please hit subscribe. That's the greatest help you could do for me. That helps get this information out there. Hit subscribe. And yeah, daily, 9 p.m. I host this live stream. Let me know where you are, what time you're listening. So we don't see the impact of any capital allocation, anything going on with these large institutional players within silver ETFs. We don't see that reflect in the spot price. It could take 2 months. It could take 2.5 months before we really see it. But as silver stackers following these charts and following this technical analysis and the history of silver and the patterns of silver, what that tells us is really keeps us bullish. That's what it does. Because when we know that a lot of money from institutional giants, these major players, went into silver in the past week or 2 weeks, then we know we're going to see that impact. And it may take a month, it may take 2 months, but if you're a silver stacker, generally you're in this game for the long haul. And you know that you're not looking for an ROI next week or in 2 weeks or even in 3 months. You're in for the long haul. And the long haul, when we see those major players making any big moves regarding silver ETFs, that tells us that in the long run, most likely silver is going to continue its upward trajectory. So it's just another part of this pattern. So let me know in the comments if you're picking up silver, if you're buying silver, and if you're interested in silver, physical silver your own, you gotta click that link I put in the description. My sponsor for this Pound of Gold channel is Money Metals Exchange. They're a great company. They're holding this contest, giving away 20 silver American Eagles. 20 Eagles every month they hold this contest. They're giving away 20 Eagles. Don't miss it. Last month's winner was John S. from Farmers Branch, Texas. And the month before that, nobody claimed their prize. So when you join the contest, you got to check your emails from Money Metals, right? I mean, they're reaching out to people trying to find a winner, and people are not answering their emails. So there's winners that have lost out on this. And we've been doing this contest for a year straight. Every month we're doing this. So 20 American Eagles, they should be yours. Click that link, be the next winner on that list, and take home that silver. I'll see you guys on the next one.